Good afternoon to us on the West Coast and good evening to those on the East. My name's Tom Ahola, and thank you for joining us tonight on our Marshall Reddick webinar on asset protection and insurance for rental property. We're going to jump right into it here because there's a ton of information to be passed along, so I just wanted to relay that. If you have any questions, feel free to type them into the comment section. We will not be responding during the webinar. However, we do take the transcript and we will be reaching out afterwards to get all of those questions answered in our follow-up calls. So without further ado, let's get started. A little bit of house cleaning before anything else. About myself, I am an advisor here at Marshall Reddick Real Estate. I'm also a California licensed realtor. So if you have any questions regarding your in-state or out-of-state real estate transactions or portfolio planning, you can reach me here. I have assisted clients both in and out of state with single family and multifamily transactions. I actually specialize locally here in specifically residential multifamily or small commercial. I'm a licensed California realtor, have been for quite a while now, and I also do have my degree in real estate. I have my associates of real estate from a local community college, believe it or not, but it taught me a ton of information, and I do have a passion for educating as I come from a family of educators. So it always helps to have somebody fully understand any concept before they fully grasp it. So if you have any questions, you can always ask as many questions as you need to before we can get those answers figured out. A little bit about Marshall Reddick and what we do here. For those of you that this is your first time coming to a webinar, welcome. Here's all the preliminary information. We are a real estate brokerage. What does that mean? It means we oversee transactions of both listing and buying real estate. In every state we operate in, we have a brokerage setup. That means agents with boots on the ground. We also are a private money lender. What that means is if you're looking for money on a short notice, or if you're looking for a loan, a private money loan for your property, i.e. you're looking to flip something, looking for a bridge loan, sometimes we do long-term loans, fixed loans. We also do property management. Now, why is property management the most important? It is the most important because you can buy a deal all day long, but if you don't manage it effectively and have a good property management team, it's not really a deal anymore. And we also have the investment fund, which is the newest offering on the Marshall Reddick book. You can check all of that information out as well on the Marshall Reddick website under the mortgage fund tab. So, we've had a principle for a long time of we make it possible to purchase residential real estate in carefully selected areas of the United States. Our organization provides real estate brokers, contractors, property managers, and access to top resources such as lenders, CPAs, insurance agents, like our wonderful insurance agents tonight, attorneys, and much more. A little bit more about it, again, if you are a returning Marshall Reddick client, you know the markets we operate in, but for those of you who are new or looking to branch out into a new market, everything circled in the green is where we have offices with teams set in place. That includes Phoenix, Bay Area, Los Angeles, California, Orange County, Riverside, and San Diego. So pretty much from Los Angeles all the way down to the border we cover, as well as all the way up to the Bay Area. We also cover Fort Myers, Florida, Boise, Idaho, Indianapolis, Indiana, Clarksville, Tennessee, Memphis, Tennessee, Nashville, Tennessee, which is actually a new exciting market that we've branched off into in the past year, Austin, Texas, which is absolutely on fire, Dallas, Texas, New Braunfels, Texas, and San Antonio. Now, of course, people always ask questions, why? Why do we invest in the markets that we invest in? And here's what I'm going to answer your questions with. Number one is the job market. We're always looking at these markets because they have tons of income producing career opportunities for your prospective tenants. We also look at markets that have low vacancy rate. To a landlord, vacancy can be your number one expense in any situation. That's what I was talking about with property management. We work hard to eliminate vacancy, and we also look at markets that are low vacancy rates. Economic diversity. Now that means that we're looking for job markets that have a lot of variability. So if something were to happen, i.e. to give an example, a small town where there's one manufacturing plant that everybody works at, if that plant leaves, there's no more tenants who can afford to live. We look at cities and markets where there's a lot of different types of gainful employment for people to have a lot of different career opportunities. If something were to happen, there would be a ton of other job markets to sustain that tenant pool. We also look at housing affordability. This is a big question for a lot of people who are local to California like I am. It's not quite affordable to live in a lot of places where, are closer to the coast. So we look at where a lot of cost of living is a little bit lower, and that provides, a happier life balance. So you can afford to, have a tenant who's paying a good market rent, and properties are a little bit lower on the acquisition cost for us as landlords. We also look at states and markets that are landlord friendly. I can't state this enough. Again, for being in California, there's so many rules and regulations and hoops you got to jump through, and the landlord is always in the wrong. I overstate, but we work in states where if you own your asset, it is your choice what you do with your property. We also look for different markets that we have a strong education on. What that means is we personally, as real estate professionals, have a ton of information over many, many years that we know about these markets. So these aren't markets that we just choose on a whim. There's a ton of research and a ton of development that goes into looking at these different markets. And if you look at each of the market data packets, you'll see exactly how much research we've put into those. So we are working constantly to keep ourselves educated on each of these markets that we operate in. And last but not least is reliable property management. Again, we choose the markets we operate in because we're looking for markets where we can have teams who keep the deal that you purchase operating as a deal and are constantly looking to keep your net operating income as high as possible. So that means if we're looking at expenses, if we're looking at vacancies, if we're looking at anything that has to do that property management needs to be getting a full scope on. If you've owned property in the past and you've had a bad property management team, you'll start to understand that 60, 90 days of vacancy is just unacceptable. That's your entire year's profit. So we always work our hardest to make sure we eliminate vacancy as much as possible, as well as every time we have a lease come due, we look at the market rate and see if we can raise it to market rent. So that's also another piece. We're not just trying to put tenants in place and be happy with that and do as little work as possible. No, we like to treat your asset as if it were our own, and we keep the net operating income high. So again, a property management company that's also a a real estate investment company. All right, without further ado, I'd like to introduce our presenters for the evening, Michael and Stan. Thank you guys for joining us tonight. They're licensed agents with over 45 years of experience, property manager for over 20 years. Huggins Dreckman Insurance has been a sponsored agent for 25 years, and they speak real estate and insurance. I know I've personally received a lot of information, a lot of wealth of knowledge from the two, and I hope that we can get a ton of wealth of knowledge for all of you as well. And last but not least, remember, if you have any and all questions, write them down in the chat and we will be sure to get those questions answered. So take it away, guys.
All right, thank you, Thomas. This is Michael. Good evening, everybody.
Yeah, I got in there.
There you go. As Thomas mentioned, we have been in the business for several years. We worked in real estate. I did in property management for 20 years before insurance. So we understand cash flow and why you're investing in certain properties. So let's get into the purpose of insurance. Most of you know this. It's to keep you from a financial loss. And it's also to help you rebuild your home if it burns down or if you have a claim. Okay. Insurance, when you're a landlord, you're looking at covering a home that could be 1 unit up to 4 units. Okay. It's going to cover your structures. It's going to cover your contents, which would be your refrigerators, stoves, dishwashers, if you purchase that. Loss of rental income, which is going to be one of the very most important things we stress on tonight. And then, of course, your liability protection in case you're ever sued. So what kind of claims are covered? Well, obviously your fire and wind and hail would be. And with certain carriers, vandalism would be. Travelers is, Safeco is one of our best as far as that goes. Then, of course, water damage from broken pipes. You've got a whole lot of other things that could happen. However, do note at the very bottom, a flood and an earthquake policy are separate. So they're excluded on your landlord policy, and you'd need to get an additional policy for that. All right, covered events, liability. Okay, this is a very, very important one. The very first example there is a neighbor or tenant slips on the overflow from a broken water line. We have actually had this. They went out to get their newspaper, slipped on the grass, broke their arm, collarbone. They were a professional violinist. Thankfully, we had liability coverage on that at $500,000. We also, the insured had an umbrella policy. So super important. Also, the false wrongful eviction. That's a reason to have a property manager and not manage your own stuff. You are definitely going to want to have the wrongful eviction coverage, but I would recommend a property management company like Marshall Reddick. So let's get into the policies. And this is a very basic landlord policy. It's going to cover your dwelling for $355,000 if you have a total loss. Then you've got your personal property, your refrigerators, etc. at $12,000. Loss of rental income. So if you had a kitchen fire and your tenants had to move out while the repairs are being done, they're not paying you any rent. So you're not getting any income. The loss of rental income, the insurance company pays you your monthly rent during the time that you're getting the unit fixed. And we'll dive into that a little bit more. Then, of course, you have your liability protection for if you get sued, medical payments for minor injuries, and your deductible, which on this one is $2,500 and 1% wind and hail.
One thing we wanted you to see on this one, this is typically what you would get from most insurance brokers, this kind of a structure. But there's a lot more to the policy than that, and that's what we're getting into tonight.
Yeah, and we're going to show you how your policy should be written, and then we can also show you why. So one of the things to keep in mind that you didn't see on that last policy is extended replacement coverage. Extended replacement coverage gives you 25% of your coverage A to rebuild. So when we saw that $355,000 to rebuild the home, you're going to get an additional 25%. If you don't have that and it runs over, that's going to come out of your pocket. We work with Travelers and Safeco. They work with replacement cost and not actual cash value, and we'll get into what actual cash value is in a little bit. But they give you the $125 extended replacement cost, and they give you building ordinance cost. This is super important, building an ordinance. I don't see it on some policies, and it's a big mistake. Places and cities change the codes all the time. So if you have a kitchen fire, and let's say your property is 10 years old, all of the outlets will be out of ordinance. Also, some of your appliances, various things. So you really need that coverage. So when you put all that together, you get what looks like a preferred landlord policy, which is what we would write you. So you have your dwelling replacement at the $355,000. Then you have the extended, the extra 25%, which gives you almost $89,000 of additional money. Why is that important? If you've ever remodeled or built anything, you understand that costs run over, time runs over. You're going to want that extra amount. Okay? Then you've got your personal property. Then you've got your loss of rental income. So right there, if you have the kitchen fire, you've got it. Liability protection, if you notice, this one's at $500,000 versus $300,000 on the last one. There's a reason for that. It's dollars a year. It's probably $5 a year to have $500,000 versus $300,000. Gives you extra $200,000 in protection. Then you've got your medical payments, your law and ordinance, and your deductible. And of course, if you put your homeowner policy with your landlord, you get 5% off on your landlord. Now let me go back real quick so you can see this policy. Notice it doesn't have everything that we recommend getting. And if you don't have all of this, you're going to come up short. So it's very important. I just had someone that had a condo kitchen fire, and they had to rebuild the kitchen, and the ordinances had changed so much, it was $3,600 to bring the kitchen up to code. And thankfully, they had that coverage. So here's what happens in a claim scenario. You have the $355,000 of the coverage A. You have the actual cost to bring the home back up to the way it was, and if you look down below, you'll see it was $386,000. So it costs more. Obviously, the cost went up, labor went up, maybe it took a little longer. So if you have a regular policy and you don't have the extended, they're going to pay you the $355,000, where the Safeco or the traveler's policy that we're writing you with the extra 25% pays you the full $386,000. Some people say, okay, well, what happens when they pay me the $355,000 and it's $386,000? Well, that extra amount comes out of your pocket, and then you're not going to cash flow on your property for quite a time. So it's very important to have that coverage. Okay, some exclusions. Stan, you want to go over some of the exclusions?
Yeah, these exclusions are pretty common. You're going to see these in all the policies. It's important to pay attention to these because they could hurt you if you're not aware of them and you haven't addressed them. Earthquakes, obviously, we're not that worried about earthquakes, say maybe in a place like Clarksville, Tennessee, or over in New Braunfels. But if you have rental property here in California or in Washington, Oregon, Idaho, they have earthquake issues there. So you need to get extra coverage if you want that kind of coverage. Flood, and that includes mud flows. Flood is an extremely important coverage. With flood, that typically follows a hurricane. People worry about the hurricanes and they worry about the wind damage with good reason because the wind can cause a lot of damage. But if you have like a Category 3, Category 2 hurricane comes through after it blisters the coastline, what everyone's worried about beyond that is the flooding, not so much the wind. So that's an important coverage to have. You want to make sure that you are in an area that's high enough that you're not worried about it. It's engineered to handle the water flow, or if you have an older property in a lower lying area, you want flood insurance. Next one's really, really, really super important, and that's all about property management. Texas, a couple of years ago, had an incredible freeze. They had a small one recently, but 2 years ago, it was brutal. We had a ton of claims, and that was from frozen pipes bursting. Most of those had tenants inside, and the house is fully covered under the policy. If you have a second of vacancy and then the freezing comes and the pipes blow, there is no coverage. There's no coverage for pipes blowing while the property is vacant. This is where your Marshall Reddick management team is going to help you. They're going to make sure that the house is winterized if it's not occupied. They're going to drain the pipes and turn off the water and be in grand shape. The next item you want to get when you can. Some states you can't get it, some states you can. This is called backup of sewers and drains. This is where water backs up from at some point in your sewer lines, and it doesn't go to the lines operated by the city. It comes back in your bathroom. Typical way this kind of claim is going to happen is you have vegetation. Roots get into the lines crack, roots go in for the water, and one day the water, when you flush it, comes the wrong direction. So you want that coverage. It's excluded unless you buy it. Mold, pollution, these things are always excluded. Any policy you go to, you get a little bit of mold coverage from most companies. They'll give you anywhere from $1,000 to $5,000. Safeco gives you $5,000, but that's only in connection with a covered claim. If the property settles, the foundations shrink or sink or angle or what have you, that's not going to be covered. That's considered a initial construction issue. Damage to unattached buildings if you have a business operating from it. Most of the properties you're looking at, the vast majority of them, I'd say 99% of them, have attached garages, or if you're in Oak Grove or some parts of Clarksville, no garage at all. If you have a detached garage and your tenant's running an auto repair facility out of the garage, if that garage burns up, there's absolutely no coverage. He or you need to go out and get a separate fire policy on that detached structure. Dog bites, big issue. Quarter of all liability claims are dog bites. And some companies will completely exclude that. Some companies will exclude certain breeds. They'll specify the breeds, or they might even just say, according to municipal code. That's where your property management company is going to tell you what those things are. Got to be careful on that. Our Safeco contract doesn't exclude dog bites, but they will ask about dogs. If a tenant has a specific kind of a dog that they don't like, they will either non-renew the policy if they find out about it, or if you ask them, they're going to say no way.
Okay, more of our exclusions, damage by pets or pests. I get this all the time. Does my policy cover termites? No, it absolutely does not. Doesn't cover squirrels in the attic. That's why you want a professional management company. Somebody like Marshall Reddick that would come in every 6 months and walk the property and make sure that you don't have squirrels in the attics or anything like that. Obviously, theft of anything not permanently installed. So all of the contents in your property that are personal property of your renters, they need to get a renter's policy to cover that. Your landlord policy will not cover that. Obviously, a lot of the planning, the zones, the municipal issues, they're not going to be covered, nor is normal wear and tear. That's why you want a property management company inspecting your property, letting you know when the normal wear and tear seems excessive. Okay. Obviously, the illegal manufacturing or production or growing of plants is illegal, regardless if it's legal in the state. If you have somebody doing any kind of illegal growing or producing, your policy will not cover that. So if they burn the house to the ground, you're completely out of luck. Once again, your property manager will let you know if they're manufacturing or if they're growing anything.
One thing, let me jump in on that real quick. There's a great way you can find out if you have a tenant that's doing something you shouldn't be doing. They'll pay you cash up front for the entire year. Don't accept it. Michael.
Well, there you go. Tenants won't open the door. There you go. Tenants won't open the door. Don't accept cash up front. And I'm telling you right now, it varies state to state. In the state of California, if you take 6 months rent up front, you cannot evict that person until the 6 months is up regardless. So never do that. You really should not self-manage. There are so many problems, especially if your property is out of state. How are you going to re-rent that? How are you going to know if the tenants are damaging your home? You'd rather have a professional property management company, a Marshall Reddick that will be there and let you know what's going on in your property. Okay, establishing our replacement cost. I get this question all the time. Why do you think it takes $355,000 to replace my home? Well, we go really in depth on figuring this out. Obviously, we'll look at the Marshall Reddick links that show us the property. We'll look at all the Zillows and everything to get the information. Then we get in deeper with the construction. So it's going to be a different number if your exterior is wood versus brick. Obviously, the square feet is taken into account because if you have a larger square footage property, it's going to take more money to replace that. Age of the roof always comes into play. Number of baths comes into play. We look at how many baths you have and the size of them. All of the flooring, any exterior porches or decks, the HVAC or if it doesn't have it, and of course all the interior walls. And we look at all of that and plug it into a system to come up with a number that it will take to replace your home. And then of course we add the 25 extended coverage. So liability coverage, super important. I touched on it a little bit earlier. Obviously, if you had somebody that slipped and fell and injured on your property, the insurance company is going to defend you and pay the claims for the bodily injury up to the number that you have there. So that's why we recommend $500,000 in an umbrella. Then basically, if a wrongful eviction happens, you'd have that coverage as well. But that won't happen as long as you have a property management company. All right, everything comes with exclusions. Okay, if you expect an injury or intentionally do an injury, obviously that's not going to be covered. So you really need to have a property management company come out and go, oh, the railing on the stairway is loose, so you don't have your renter hurt himself, would not be covered. Obviously, any other locations aren't going to be covered. We're only covering your landlord property. All right, some more exclusions. Okay, loss assessment. This is an excellent coverage to have. A lot of people don't get it. If you have an HOA and your HOA is underfunded for any reason and they have to do a special assessment, that will come out of your pocket. If you have the coverage, then the insurance company would pick up your special assessment. Okay, property damage, they need to get a renter's policy. I recommend that every landlord make their tenants get a renter's policy. They're about $150 a year, covers them for any liability, and it covers their personal property. Okay, obviously this landlord policy is for your one property. It's not for a boat, a plane, a car, daycare.
Make one thing real fast.
Yes.
Now, just to pick up a couple of things real fast on this exclusion that you need to be aware of. Michael covered it, but I want to kind of get just a tad bit more in depth on it. Loss assessment coverage. Loss assessment coverage is typically something where when the common area experiences a claim and there's not enough coverage to pick up the loss. And so the HOA may have $1 million of coverage. What happens if someone sues and wins $1.5 million, and the HOA only has $1 million? They're going to assess the other $500,000 on the rest of you. Like Michael said, that insurance companies can step in as long as you have this coverage and pay whatever limit it is that you have. Typically, we like to start at no less than $15,000. You can buy $50,000 for a couple of bucks more. Other thing I wanted to mention real fast is the workers' compensation item there. A lot of people will self-manage, on a 3 or 4 unit, and they'll get to like one of their tenants, and they'll kind of make that their sort of property manager if they're self-managing. Huge mistake. If you do that, if you do anything, if you give them a rent break, if you give them anything, you have a workers' compensation exposure, even if it's just a cut in the rent. So don't do that. Marshall Reddick Property Management Services are going to keep you out of trouble. If you notice the theme here, there's a huge theme. Property management goes hand in hand with your insurance program.
All right, some do you knows. Texas, you have a mold supplemental coverage. Higher limits are available, but they do get expensive. You get a basic number, it's usually around $5,000. You can increase that in percentages, but it does really increase the rate of your policy. Sinkhole coverage for Tennessee, Florida. In Tennessee, it's not very expensive at all. And of course, in Kentucky, you can get mine collapse protection, optional coverage. It's not that expensive. Okay, we're going to get into insider tips. This is one of my favorite parts. Like I said, I did property management and real estate sales for years and years, worked with HOA, homeowners associations. So I know the real estate part. Now I've been doing insurance for several years. And so a lot of these tips really are going to help you out. Number one, and this is huge, vacancy clause. So many people that have landlord policies have no idea about this. After 60 days of vacancy, you no longer have coverage for almost every item on your policy.
And some companies limit you to 30 days. Safeco gives you 60.
Yeah, you need to really check your policies. So obviously glass breakage and vandalism, theft and burglary, even attempted if they just break a window and run away, you're not covered. And at the very bottom, the big one, fire. If your place catches on fire and it's been vacant for 62 days, you have zero coverage. Okay. Now, the way around that is you have a property management company that communicates with your insurance company, and you communicate with your insurance company. And when you're at about 50 days of a vacancy, you contact us, say, my property has been vacant, it's coming up on 60 days. We get you what's called a vacancy policy. And then you will get your coverages back in place. It is more expensive. Once you get a tenant that moves into that property, we cancel the vacancy policy and put you right back into a landlord policy. But at least you have the coverage during that vacancy. All right. Stan talked about this earlier. Damage from burst frozen pipes is not covered from the very first day of vacancy. So if you have a property manager, he knows they're moving out on the 30th, they're going to be in there, either drain your pipes or winterize it and make sure your property is going to not have the broken pipes, because you will not have coverage. Okay. Now, stay in touch with your insurance agent, it says at the very bottom, and use your property manager. If you're self-managing from California, a property in Texas, how are you going to get down there and winterize your property? You're not going to think about it. So absolutely have a property manager. All right. Now we were talking about actual cash value and how that can hurt you versus having replacement cost. And I don't even want to write an actual cash value because a lot of people are upset when it comes to a claim. This kind of breaks it down. If you have a claim of $100,000 and you have an actual cash value, they're going to take everything into depreciation. So they're going to look at your roof. They're going to look at everything in your home and deduct it for depreciation. So at the end of the day, on your actual cash value policy, the $100,000 claim, they're only paying you $70,000. The extra $30,000 comes out of your pocket. When you have replacement costs and building codes, you're going to get the full $100,000 back. So you lose no money on that, and you continue to cash flow. All right, deductibles. We really look at deductibles when we're quoting you out. We'll bounce them around, look at $1,500, $2,500, but the sweet spot for 1 to 2 units is a $2,500 deductible to get the rate you're looking for to cash flow. As you get into bigger units, 3, 4, you might want to look at doing a $5,000 deductible to keep the rate down. And wind hail deductibles, usually 1 to 2%. When you get higher than that, it doesn't really benefit your rate that much. Okay, where and what you buy affects the cost. This is a no-brainer in the insurance world. Okay, your higher rates are going to be the coastal areas where hurricanes happen, where tornadoes happen, hail zones. Your expensive areas are Houston, Florida, coastal areas on the east side, and some of the Carolinas and Georgia. Now, the next page is where you want to buy. And you can see some of the good areas are Austin, Clarksville, Arizona, California, except where there's a lot of red brush, which is, trees and vegetation, Indianapolis, Boise, and Florida. Odd thing you might notice here is this is where Marshall Reddick is mostly located. They've done the homework for you. They've found the areas that are going to really get you the best rates so you can cash flow. Okay, Stan, you want to take this one?
Sure. There's tip number 4 that we continue on is what you buy affects your cost. The newer property, obviously, is going to be a lower insurance cost. Most insurance companies will give you a first-year super deal on your insurance. You'll get a little bump the second and third year, but the first year they want you to come in and join them, so they can get you a great deal. Now, if you have a property that's a little bit older, a great way to lower your insurance premium rather significantly, 8-10%. It's a big bump. And what you can save is to have a newer roof. Most roofs are going to run you, let me rephrase that, most roofs are in the situation where when you're looking at an older property, they're always going to tell you, well, they got about 5 years left on the roof. No, you want to find out from the sellers really where that roof is. We've had people find out that they actually only had a 5-year-old roof on the home. We were able to get them a discount, save them a fair amount of money. The 3 to 4 bedroom, 2.5 bath, 2,000 square feet, that's your sweet spot for your insurance pricing anyway. Do not get a pool. Do not get a pool. They look great when you're trying to rent the house. People imagine sitting there on a Saturday afternoon, how wonderful it is. That is a liability claim waiting to happen, and a big one. So we do not recommend you buying anything with a pool in it. And when we're doing our rating systems, we will find out the claim history on a property. We'll alert you if we see something where they've had 3 or 4 water pipe breaks. That can be a real problem for you. Insurance score is a big thing, except you're in California. When you're buying property here in California, we don't run the insurance scores. But outside of the state, the history of the property, and by that we mean the claim history of the property, and your personal claim history will vary your rate. I bought a house in Clarksville, and I got a really pretty good deal. And a couple months later, I was working on somebody else's, and I thought, wow, same kind of house, same year, same this, same that. His premium was 50% more than mine, so I looked further into it and realized that there had been some claims activities on that property that he was buying. It's a big deal. It can save you a lot of money. We're talking hundreds of dollars. Pay in full. This is one of Michael's all-time favorite discounts. He raves about this one, and there's a reason why. Many companies will give you what's called a paid-in-full discount. In other words, pay it up front, 100% of the premium, and they'll knock some premium off. Well, when you impound your accounts, or some people will call it escrow, your insurance payments with your mortgage company, they're paying the insurance every year in a one lump sum, maintaining your discount, yet you're only paying it monthly. Kind of a neat deal. And the number of units will affect what you buy. Many insurance companies will not offer policies if you own more than 6 to 10 units. We run into this all the time. We have a program with our Safeco insurance program where they will allow us to write up to 20 units, and without even asking, 25 if we ask them nicely. So we're able to grab a lot for you that way.
All right, tip number 6. Tenants' dogs can be challenging. Stan touched on this earlier. It's super important, okay? Make your tenants buy a renter's policy. Okay, that will cover liability protection for them, and avoid renting to tenants with dogs with a biting history. If you have a property manager, they will ask all these questions. They will also ask us what breeds certain carriers don't want, like Safeco Travelers, certain dog breeds they don't want. And many companies, and they won't even tell you this, but certain insurance carriers have a full exclusion. So they will not pay for any animal bite, any animal issue. So you need to know that going in. There is a special liability market that exists. So if somebody does rent your place, they can get a special, what's called a FIDO, and it'll cover that dog, but they are very, very expensive. All right, tenants can be challenging. I think we all know this. Once again, have them buy their renter's insurance. I can't tell you how many times there'll be a issue in the unit, a leak or something, and the tenant feels that their property was damaged and it's your fault. It is not your responsibility in any way, shape, or form. So, also, if a tenant's evicted and they vandalize your home, most companies will not cover that damage. And I know we went through this a lot during the pandemic. People would be mad they were moving or something and they just destroy the place. Safeco generally would cover the vandalism claim. We actually had one in Vegas where they covered the vandalism claim. It was very nice. Okay, loss of rental income. I touched on this earlier. Okay, normally you'll get a 10% coverage. So if you have $355,000, you'll get 10% of that as your loss of rental income. That's nice. But you also need to look, as rents are going up everywhere, you might need more coverage. So the example shows $150,000. You'd have $15,000 of coverage if your kitchen burned down and your tenant moved out. But what if your rents are $3,000 a month? Well, you're going to need more coverage than $15,000. You generally should have 12 months of rental income coverage, maybe even a little more. It definitely is going to take you at least a year if there's a kitchen fire to rebuild. And if it damaged several units in the area, or was a large claim or a large disaster, it's going to take even longer to get all the construction together. All right, keep your insurance current. This is a Stan thing, and he hits the nail on the head. When you guys change your insurance, you refinance and you get a new lender, if we don't know and nobody lets us know, then we're billing your old lender. The amount doesn't get paid because the old lender doesn't contact you and they don't contact us, so your bill doesn't get paid, and then your insurance policy cancels. You need to really be in contact with your insurance agent at all times. Same if you move or your email address or phone changes. If we can't contact you to say, hey, the payment hasn't been made, looks like a different lender, your policy is going to cancel and you're not going to have coverage.
We can't emphasize this one enough. That's why it's here. It seems like it's a small item on the face of it. I spent an hour and a half this past Friday with a very nice customer who found out that he didn't have any coverage. The lender had changed their mailing address. That's all that it was. It went to a location of a lender, but they didn't forward it on. He had a gap, as it turned out. We got his policy reinstated, but there's a 60-day gap in coverage. Fortunately, nothing had occurred. But this is incredibly common. One thing that will also help you, if you don't like to talk to people, you can get on your Safeco online account and check periodically to make sure your policy is enforced. That's how this particular customer found out about it.
Absolutely, and to just build on that, there's a 24-hour, 7-day-a-week Safeco number. You can call and let them know your lender changed, and they can do it for you. Yeah, that always helps.
And that's live. They will do it. You can talk to them, have them do all the work.
All right. I learned this when I got into insurance from Stan. When $1 million is less than $500,000, it's not going to occur often, hopefully, but it can occur. A lot of companies will write you a policy that says you have $500,000 for each occurrence up to $1 million annually. So let's say you had 2 claims of $490,000, and then you have a third claim of $100,000. They're only going to pay up to $1 million during that 1 year. So with Safeco and Travelers, they offer $500,000 for each occurrence. So if for some horrible reason you had 3 claims during the year that went, well, they just have to be $500,000 each time, and they will be covered. All right, pricing. The whole idea of deductibles is to get your pricing where you need it to be to cash flow. A lot of people go, I want a low deductible, so if something happens, I can just turn it into the insurance company. Well, every time you file a claim, the insurance company looks at that, and the more claims you have, the higher rates you're going to be paying. So we look at deductibles, like we said earlier, at around $2,500 for the 1-2s and $5,000 for your 3-4 bedrooms to get your rate right. Okay. Always know what your policies are and how they're written. We will walk through them with you and go over your coverages and explain it to you. Also have a professional property manager. If you are going to cash flow on your property, you need a property manager. A lot of people go, I don't want to pay the 7%. Well, that 7% you're going to save over that first year if you have any kind of a claim you don't know about that's not covered, if your tenant destroys your place, if your tenant moves out and doesn't tell you and doesn't pay rent for 2 months. Your property manager is really where you're going to want to go. And Marshall Reddick Property Management, I know they inspect the units every 6 months. They're really on top of, and they really look at who's moving into your place. They run all kinds of background checks. And you as an owner may not do that. All right, townhomes. Different coverage applies to townhomes and condos. Okay, your condo policy doesn't cover the exterior because your HOA is going to do that. All you're going to do is be covering from the walls in. So it's going to be a set amount. There's not a replacement there. There's also no extended replacement coverage. So if you say it's going to take $100,000 to rebuild the interior of your condo and it's $110, you're not going to have the coverage. Something to keep in mind. Okay. Also, reading your CC&Rs. I did it for years. If you get a condo and you have CC&Rs, you can send them to us. We read them. We can see what's covered. Some HOAs make you cover the roof and the exterior of the condo, as strange as that is. So you're going to need different coverage. And then again, the loss assessment that Stan talked about earlier, and professional property manager. I can't tell you how many times Marshall Reddick will say, we're doing a condo for this person, and they'll send the CC&Rs, and I can see what insurance you need. All right, you want to take that?
I don't know. This is your special.
Yeah, you know what? I just saw this umbrella.
This is your thing.
Yeah. I, like a lot of you, probably didn't know a whole lot about insurance until I started selling it. The umbrella policy is the greatest policy you can get. They run about $1 a day, so about $365 for a basic policy. Of course, the more properties you have, the more vehicles you have, the rate's going to go up. But an umbrella is very simple. It is just like when you look at an umbrella. It covers all of your assets as a liability policy. And you can get $1 million up to $10 million. And people always ask, should I get an umbrella? Well, no matter who you are, if you're a 20-year-old couple that just got married and you have one car and you're renting a condo, you should have an umbrella policy. Because if you have a huge accident and you're liable and it costs more than $250,000 or $500,000, your umbrella will cover you. And I've unfortunately seen this happen. And in California, it varies state to state. California, they can assess your paychecks up to 35% to pay a lawsuit. The umbrella will protect you from that. And of course, there's different umbrellas. There's what's called the real umbrella that Safeco offers, and that's the best protection. It's a worldwide auto umbrella, so if you travel, you go to a different country, have a car accident, and it's a high liability claim, you're covered. Everybody should have an umbrella policy. If you've bought a landlord property, you need an umbrella, I guarantee you. All right, so here's what it should look like. You should have your homeowners, your auto, any rental properties, vacation homes. It all falls under your umbrella, okay? And that gives you giant discounts. So when I place your umbrella policy, your auto policy gets a discount. When I place the umbrella, your homeowners gets it. You want the umbrella policy. Also, if you look over in the right-hand corner there, you can see Safeco Home and Landlord. If you place your homeowner policy with Safeco and you get a landlord policy, you get 5% off your landlord policy. It's a great way to go. So we have Safeco that we work with very closely. They are a great company. I know I insure myself with them and Stan does. They offer the 24/7 live service center. Basically, if you're lying in bed and you wake up at 2 a.m. and you go, Michael talked about this coverage. I only have $300,000. I want to increase it to $5. You call the Safeco rep, they're a live person, they're licensed, they can adjust your policy. They can also quote for you and issue for you. So if you've talked to me and you're ready to go, you give them a call, they bind the policy. The next morning they send me an email that says, bound the policy or made this change. And Travelers offers it as well. And these are the two we mostly work with going outside of California because they're the best insurance carriers around.
One thing that we want to let you know about why you would want to choose us. Why wouldn't you? Look what we do. We've been through this whole program with you. We've shown you some things that no one else is ever going to show you. When we do the insurance on your property, we're going to research each property, like Michael said, to provide you with the most consistent program as possible. We're going to look at everything. We find every conceivable photo, and if we can't find one, we're going to ask you for some. We'll examine, as we mentioned, the online inspection. Sometimes we'll even look at written inspections that you might get from property inspector, because there'll be some things there that we need to know about. You're not sure, but we can look at that and determine that. And it's the companies we use. It pains us. Sometimes people ask us to look at the existing policies they have, and we'll see 100,000 liability. We'll see a basic plan 1 in Texas with maybe $10,000 of water damage, and that's not going to do you much good if you have any kind of a water break or any kind of significant liability claim. We're going to set them up correctly, and we're using Safeco and Travelers. Travelers used to be the number one independent agency personal insurance writer. They're not number 2. Why? Because Safeco, which is owned by Liberty Mutual, just bought a huge set of companies in the Midwest. Together, this group is the number 1 writer of personal insurance policies. We're not bringing you brand X. We're bringing you strength. So we also do our best to keep pace with replacement costs. You're going to see this year on policies, if any of you listening have some with me, you're going to see a bump in your values. Why would we do that? Because the valuations are going up rather dramatically in the last few months. We are going to protect your rental income. Our insurance companies will inspect your properties and exteriors to look at them to see if we've missed something. It's not at all unusual for us to get a note from someone saying, hey, it's this, not that. You guys misvalued it. We're going to fix that. Usually it goes down. Sometimes it goes up. We will give you discounts, new roof discounts, home and landlord management discounts. We do everything we possibly can to bring it in such a way as to lower your premium, keep it consistent. We're not going to lowball you. We're going to bring you a consistent program that you can live with for years and years and years. Also, when you call Safeco, Safeco has our recommended profile for our customers. We call it our protection profile. They know what we want for minimum limits. Travelers is a full service company, but they don't actually quote. Again, Safeco will quote for us. We're not always available. You might not get us at 3 o'clock in the afternoon on Saturday, but you need to. You need to do this. You're looking at a property. You want to know if it's going to cash flow, what the insurance will do for it. You call our number, and they will run some quotes for you right then and there. And they know what we want you to have. They know we want you to have the extended coverages, the $500,000 liability. They know we want the building ordinances. They know everything that we want you to have. There's been a lot of work over the years with Safeco.
And I just want to jump on top of that as well. A lot of you probably are starting to realize that it's going to cost more to replace your property because all the materials are going up, labor's going up. It's taking longer to get contractors to do work. So a lot of people are calling and saying, well, last year it was $300,000 to rebuild my home. Now it's $320,000. And yes, that is true. Maybe even $340,000. So you need to understand that, and you want to have the proper coverage. That's why we work so hard to do that. The other thing is always let us know if you replace the roof because there's a discount. We can go into the policy and change it and get you a better rate. Same with a property management company. And this is my favorite thing with Safeco. If you're using Marshall Reddick Property Management like you should, and when we're quoting your property, there is a huge discount for you using a property manager versus you doing it yourself. And then, of course, you've got us. Stan is down in Los Alamitos at our office down there. I'm up in our Anaheim Hills office. You can get a hold of us, myself pretty much Monday through Friday. and Stan pretty much 7 days a week. I don't know that he takes a day off, but you also have us if you need anything. We're here to talk, email you back and forth. Hopefully you guys have some questions from all this webinar that we can get back to you on. And I'm going to turn it over to Thomas.
Perfect. Great presentation. But yeah, so we can just go over the follow-up technique of what we've been talking about how to get your questions answered and also what to expect for the consultation with an advisor. You know, a lot of people are here because they're Marshall Reddick clients and they're maybe looking to buy investment property, or maybe you just had some questions about your policy. But either way, feel free to reach out and schedule a consultation. And what a consultation generally looks like is, you know, number one, we have goal setting. So we kind of sit down and think about each of the processes and why you're wanting to achieve these goals. Or, you know, to give an example, hey, I'm retiring and I don't know what to do with my self-directed IRA, or hey, I'm looking for my first property. What do I do? We also do the how. We evaluate your options, which means, you know, how do we get to those goals? The when is also very important. Are you looking in the next 30 days, the next 6 months? What, setting your criteria. Where, identifying which market works best for your investment. And who, which is introducing you to all the key players, i.e. your insurance agent, property manager, or local agent in each office, depending what you're looking for. All right, and as we said earlier, thank you for joining us. Feel free to reach out, schedule a consultation. If you have any and all questions, we'll be reaching out to see if we can get those questions answered. I'm going to go ahead and leave this screen up, and this is my personal contact information for this, or you can reach out to us at marshallreddick.com/consultation. Again, thank you everyone for attending. I'm just going to go ahead and leave this information up here for the next couple minutes, and feel free to reach out. Thank you very much.